Boom! What's going on, guys? Welcome into your Energy News Beat here on this gorgeous Thursday, February 4th, 2021. As always, I am your humble correspondent, Michael Durner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the producer of the show, and the director publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Turley, how you doing today, my man?
Hey, it's a beautiful day in the neighborhood, Bear Country, and we are ready for the Hall Pass.
We're ready for a hall pass that we'll give you out tomorrow. We got a stack show. You can check out all of that in a bag of chips to my left here. But first, guys, just go ahead and subscribe to this YouTube channel, Energy News Beat, the best way to stay up to date on all of your energy news. Also, go ahead and check out our website, www.energynewsbeat.com. It's legit just a stream of consciousness of the top energy stories. Everything we pull for the show comes from that website. Highly recommend checking out. Subscribe for our one-click notifications. It's legit an IV of news. So I don't know where you go anywhere else. On the data, on the market today, we got a lot of green numbers. The last 3 days have been up. I'll read top line numbers for equities, and then we'll kind of dive into some of the stories here. 0.8 of a percentage point for SPY, 38.62. Nasdaq was up 0.75 of a percentage point. That's again three back-to-back days of gains on their Dow Jones, only up 0.6 of a percentage point. Two reasons why we see markets up today. One, quick batch of corporate earnings, but some good economic data. I prefer to start with the economic data because I think that means more. Better than expected jobless claims went ahead and dropped. First-time claims for unemployment insurance totaled 779,000 for the week ending in January 23rd. Which is good because economists were expecting 830,000. So, it's not great. We still have 779,000 people applying for jobless claims, but that trend hopefully to continue as long as there's, the quote from Charlie McGinn at Equity Derivative Strategist at Norma. He said Thursday's labor market data showed further momentum in an economic recovery, driving another blast of risk on into equities. I also would say that has to do with the Fed being pumped in. On the corporate earnings side, eBay was up 10 percentage points after it beat top-line revenues. PayPal up to 6 percentage points after strong results. Qualcomm slipped 7 percentage points after reporting revenues that were below the consensus. Apple's in close talks to finalize a deal with Hyundai Kia to produce driverless cars. Originally in January of 2020, they were announced. Hyundai kind of backed off. And the concern was Hyundai doesn't want to become Foxconn. Do we just really want to become? No, seriously, if you're Hyundai, do you just want to become a manufacturer for something that Apple's going to slap their logo on? I don't know. You have your own brand, so it looks like what's going to happen is they're going to use the Kia brand to go ahead and brand these Apple cars versus the Hyundai. So it's going to be very interesting. We'll be following that. Let's go ahead and move over to the crude oil side. The bulls are back in town, baby, and they've been in town for a while now. 56.18 is the current front-month futures contract. That's up 0.9 of a percentage point. Stu's aptly mentioned. We'll know what Brent is. He'll want to know what Brent is later. So, Stu, it's 58.82, up 0.7 of a percentage point. WTI gaining a little back into the curve on crude oil. It's down. It was up 0.6 of a percentage point. Currently trading at 53.60. So that spread between where we're currently trading and what that future strip is, it's pretty unbelievable. It's just bullish crude oil data. We saw about a 1 million barrel draw. We were expecting about a 4 million barrel draw, but the fact that it still came in as a draw, I think helped people. We've seen production stay pretty flat, 10.9, 11 million. Traders really like that. And then that refinery utilization, it's about 82, 83 percentage points. It's a good number. Let's see if we can get it over 85 in the next couple weeks, but it'll be interesting to see as, all these cities begin to open up, whether or not vaccines roll out. It's going to be very interesting and spicy data time. Speaking of stocks, natural gas stocks dropped today. We saw 192 billion cubic feet draw. That buoyed prices to the north. Up 4.8 percentage point. Choo-choo. $2.92 for that front-month natural gas contract back into the curve. $3.05. That's about 2.65 percentage points on the upside. XOP, which is our E&P securities contract, 0.7 of a percentage point on the upside. $70.05. Good top-line number for XOP. OIH, which is Oilfield Services, it does well today. Up 1.9 percentage points for all you Bitcoiners out there. Currently trading about 37,286. And I'd be remiss if I didn't mention Dogecoin, currently trading at 4 cents and about 0.6 of a penny on that side. Let's go and look at our E&P stocks. We got On the downside, U.S. Energy Corp, 4 percentage points. New Concept Energy, they're down 5. Tensico Gas, they're down 6.6. Haldor Energy, they're down 7.2. And Peabody Energy, a coal producer up in Wyoming, they're down 14 percentage points. On the upside for our energy stocks, SM, 6 percentage points on the upside. Good for them. Whiting, they're up 7 percentage points. Ring up 8 percentage points. Must be because they're moving to Houston. Brayhaas, they're up 9.4 percentage points. And Amplify Energy Corporation up a cool 11 percentage points. Stu, internationally, what do we have today, my friend?
Hey, we got a stacked show here, dude. Saudi, this is a real quick one, and you and I had talked about Brent. Saudi just put out that they are raising the U.S. price by 10 cents a barrel, and then they're raising prices to Europe by $1.30 a barrel and or $1.40. But it's key Arab light grade to Asia will only get a $1. And Michael, I'm a little confused on some of this because what happened to the Brent versus WTI spread? It used to be big.
Well, it's a lot of stuff. I mean, it used to be like $10. Now it's widened and goes away. Yeah, I mean, it's just a sign of the time, Stu. People are wanting the sweeter. It's a little heavier of a crude that comes out of most of the international. Saudi is one of the few blends that comes out that's actually really light, resembles that WTI as well. So it's just what's in demand right now. Nobody needs heavy oil because that's all used for jet fuel. U.S. gets all of it from Canada. So around the world, where's all this heavy getting sent? Right now, you've been saying there's only one buyer. It's China. So it's pretty interesting. What I'm interested in this new Rystad report. You've got some interesting numbers out of them. What do we got there?
Oh, you bet. Here's the Rystad numbers, and this is tying directly into my next two other stories as well. The world's title is Global Installed Offshore Wind Capacity to Grow by 37% in 2021. That's causing a gigantic bunch of problems in offshore vessels, offshore work crews. I think it's unbelievable. Now, the world offshore wind capacity rose only 15%, Michael, in 2020. If they're going to expect to grow 37%, the infrastructure to grow it is not there. Here's a couple big nuggets at Rystad. We like the folks over at Rystad. They're good people. Major contributors
outside of their natural gas calls. Yes, they're great people. I gotta just get that in there.
You are vicious. Anyway. China is the biggest reason for growth just because they're exploding on their demand for energy. 3.1 gigawatts, there's your favorite gigawatts, was installed on offshore. Anyway, huge. Unbelievable.
Gigawatts.
All right, next one up, BP and Russia. There is a Russian conspiracy that is actually real. And this one is BP and Russia giant Rosneft signed a cooperation agreement to work on joint energy transition, low carbon, hydrogen, and they're moving forward on it. So if anybody believes it's renewable and all that is not coming, when you got BP working with the Russians on this, within 10 years, BP's cutting output by 40%. So that being said, there's a lot of things coming around the corner. That brings up my third article, Markle. Boom. And that is, we're taking a look at the major problem with renewables. It's the grid. And so here's a couple quotes. The article that we put out is Europe's unforeseen renewables problem. It's the grid is reliable critical. I'm going to give you a couple quotes here, and then let's talk about this for a second. Bloomberg reported on the incident, citing several sources. While no one could directly blame the blackout last month, it increased the risk for more blackouts of renewables. The problem is not when the next blackout will be. It's not if, it's when. And it's 50 gigahertz. 50 gigahertz, if it bumps up or down, the system will crash. So renewables just don't have that capability to do that. Stefan Zach was the head of communications at the Austrian utility EVN, was the one that was saying that. Even in countries with high good grids. Now, I'm going to throw this out, Michael. We have $1.9 trillion worth of a stimulus bill coming out. Billions of that is going overseas. Mm-hmm. If we just spent billions on our infrastructure, we could move faster to renewables. Your thoughts?
Yeah, I'm of the mindset that if you're going to if renewables are going to compete in the open market, they need to figure out how to do it without subsidies. So yes, do I not enjoy sending money elsewhere? But really, we need to figure out, can the American clean energy or renewables, really whatever wind and solar power, I don't consider them necessarily renewable energy, but these other cleaner forms of energy, which is for sure right. It is. Can you make them competitive with the low cost? I don't know that. I'm also getting word that we're now banned in Russia. So thanks for that, Stu. And this just further lends our support that ESG, renewables, clean energy is coming. If you're not on the train, I'll say it, you're an idiot, because it's happening whether you like it or not. I love our friend DRW. He wrote a great post today talking about kind of the ESG movement and whether I'm going to take the other side of that. I'm excited to talk with him tomorrow and go back and forth on that because
yes.
Yeah. Do I agree with the sentiment? Yes, but that the market's doing what the market's doing. I don't want to be the old curmudgeon who's still using fundamentals to value stocks when really I should just be buying GameStop.
Fundamentals?
The old curmudgeon. It's like, I turn into you, Stu. I start reading about fundamentals and market cash flow and, revenue per unit square. It's like, blah. What is that? Anything else, Stu?
Nah, I'm just having fun.
All right, everything via the world's greatest website, www.energynewsbeat.com. Thank you for that, Stu. Quickly, we'll cover here our U.S. side. As I mentioned, natural gas stocks drew about 192 billion cubic feet. So that's largest number we've seen on tap. Rises natural gas prices up. As I mentioned, currently trading about $2.97. We saw two earnings today. We'll go ahead and cover them quickly. First, ConocoPhillips reported a fourth quarter loss of about $0.8 billion or $800 million. It's about 72 cents a share compared to fourth quarter 2019 earnings of $700 million. So a couple things here. One, they had an unrealized gain on their Synovus Energy equities. Remember, that was bought. It was Synovus acquired Husky, or the other way around. Was it Husky acquired Synovus? Either one of the ways, when that transaction takes place, you get some unrealized gain on the equity because the market has now priced it in. Full 2020 earnings were a $2.7 billion loss, or about $2.50 a share, compared to full year 2019 earnings of $7.2 billion. Excuse me.
Bless you.
Thank you. CEO Ryan Lance thanked his workforce for their efforts in face of, quote, the most challenging year. A couple things on that. Really, we haven't seen the acquisition of Concho, but the all-stock deal is looking better and better and better. What would Concho cost now if their management hadn't sold out at the bottom? I don't ever want to negate somebody, but if you were a Concho shareholder, woohoo, you just got scammed. Imagine their value right now, a pure Permian play that actually makes money in this environment. We're about to cover Northern Oil and Gas. Holy smokes, choo-choo, they're going to the moon. Sorry, I think looking back on the ConocoPhillips Concho deal, we are going to look at that with, wow, talk about selling for 20 cents on the dollar. Speaking of our friends over at Shell, we've been talking about their trading portfolio the past 2 days. Well, they come out with earnings not great today. Net income attributed to Royal Dutch Shell shareholders amounted to a loss of $4 billion for fourth quarter 2020. Which also includes a $2.7 billion post-tax impairment. They also reflected lower realized prices for oil and LNG and pretty lower volumes. Give you guys an idea, here's some of the top line. Cash flow from operating activities was about $6.28 billion compared to third quarter of 2020 of $10.4 billion. And in fourth quarter 2019, they did see $10.2 billion. So, again, some of this they were to pay a dividend of $1.3 billion. Nothing like dipping into the debt fund to pay a dividend. We love that as the sell side loves that. But I saw a quote. Speaking of sell side, I saw a quote from Paul Sankey. who runs Sankey Research, great stuff with there. He ripped into BP and Shell and said their strategies were designed in a corporate strategy meeting instead of looking by the numbers. So it's going to be very interesting to see how these play out. As you know, Shell is making a much more concerted effort to go kind of the BP route. ConocoPhillips is kind of doing a little both. They're kind of straddling that board. That's going to be interesting. We're going to finish up quickly with Northern Oil and Gas. Last night, they agreed to acquire non-operating natural gas assets in Appalachian and in the Appalachian Basin from Reliance Marcellus. This extends the non-operating model to Appalachia, the leading natural gas refinery, and creates a national non-operated franchise. So that's the thing about Northern Oil and Gas. They don't operate. They come in, they buy, operate non-operated stakes, and it's now they have some operated stakes. Don't get me wrong, they do some of that, but really what they do is some of this stuff. And to give you guys an idea, it was a cash purchase of $175 million, less than 1,500 per flowing MCF, which is good. I mean, to give you guys an idea, they expect. Oh, I read the number in here. They expect listen to this. They expect on unhedged cash flows from these operations 55 to 60 million and only 25 to 30 million in terms of net capital expenditures that's set to Northern. That's a pretty good deal right there when you want to talk about 3, 4, and especially if natural gas is going to become more important. I like this deal. Northern has done a tremendous job. I mean, talk about coming back from the grave. November or March, they were currently trading around $2. Currently, they're up at $24. Holy smokes.
Good management, good numbers. I like them over there.
Yeah, we do like. They're Minnetonka, Minnesota. So any Minnesota fans, they're going to go play some pond after the board meeting.
We produced one of their interviews last year.
Oh, I don't remember that, but sweet. What else we got on the store today?
Don't get old on me, man.
Yeah, right back at touche, Stu, touche. But with that, guys, we're going to get out of here. Let you get back to work, finish up your day. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out on the Energy Beat. We'll see you tomorrow.